Hello, everyone. Welcome back to How to Trade in the Switch Markets community. I'm Shane Vernier, and this is CPI Live. Today, we're going to cover the latest inflation data. We're going to get up and running with a few trade ideas. We're going to talk about what today's report really is going to mean to everybody in the market, not just everybody up in Washington, D.C. Remember, we have a new Bureau of Labor Statistics head. They fired the old statisticians that were out with the bad NFP report, and now you've got a new group, probably didn't take the measurements of this CPI data, but they're going to be doing it in the future. There's a lot of folks that are eagerly watching this, eagerly anticipating what could be a real blockbuster report. So I'm excited. I'm ready to go here. There's a lot going on in the market, so we're going to get right to it. It's good to see everybody back in the room. Ahmed, good to see you. Antivirus, good to see you. Yes, sir. Always a pleasure. Kiram, Jacob, you guys, what does it take to be a successful trader? You guys are talking about brain power. A lot of the times it's emotional control. So, I think everybody in this stream right now that's watching this has the mental capacity to be able to trade. It's just a question of whether you can dial in that emotional capacity. We talk a lot about these things in our workshops. We talk a lot of psychology on our live streams. If you're interested in listening to somebody who's been around just a little bit, I'm not pulling rank here, but I've been in this since 2011, had some decent success. I mean, I'm still here. I'm still in the markets. So if in fact you're interested in maybe getting some of those lessons that you can only hear from a veteran, then tune in every now and then. Every now and then we get into that psychology, which is hugely important. So I wanted to address that in the live chat over there on YouTube. Lita, good to see you. Lita, welcome. We've got a lot going on here. Wizard Alvin, Bobby Bob. All right, guys. Let's go ahead. Your expectation on CPI on Bitcoin and other markets. Yeah, we're going to go ahead and cover as many as we can. And we've got about 9 minutes until the number drops, so I want to dive in. Let's just dive right in right here. A couple of things to cover. Number one, welcome to the Switch Markets community. If you need a broker and you want to actually get in on the ground and trade some of these ideas that we're talking about today, you can certainly do that. Tina Jing, good to see you. Bright and early here, Tina. Bright and early. You are amazing. I don't know. We'll see. Amazing. We'll see if we can get in on a few pretty good trades. I think we can. But in any case, welcome to the Switch community. If you need a broker, go ahead and check out Switch Markets. Bring your ambition into focus with thousands of markets, low spreads, and zero commission accounts. Be sure to reach out over there to customer support. They'll get you up and running in just a few minutes. There's also a reverse KYC program where you can start really trading immediately before you pass your KYC process. So that's pretty good stuff. I want to cover this right before we begin CPI. The RBA speaks last night during the U.S. overnight. It would be the early day, probably midday in Australia, or early morning probably in the U.K. The RBA, the Reserve Bank of Australia, decided to cut interest rates from 3.85% down to 3.6%. But the big thing that we're talking about that's really important here was the tone out of the RBA. They talked about there's more on the way. There's more rate cuts on the way, and I think that's absolutely instructive of just where we're at, as far as a global monetary policy. We're very dovish. We're very dovish right now. So one of the things that I like to do on a CPI day is identify some assets that aren't linked to the U.S. dollar so we can get in and maybe trade these without being directly impacted by whatever happens with CPI. So this is the Australian dollar, Canadian dollar, one of my favorites. We looked at this one yesterday. It's sort of a really messy chart when we get into the longer time frames. The weeklies and the monthlies really show a lot of rotation between the Aussie CAD. Remember, this is a commodity pair. As gold goes, the Australian dollar goes. As oil goes, the Canadian dollar goes. And a lot of times we really see these two butt heads and get into not just trending markets, but also periods of really flat markets. This is a daily chart. I wanted to outline this level before our CPI number drops. I want to work right from this swing low right here. I don't want to take it right up to that high, today's high. Why would I go on today's high? Because it's the upper extreme of the market. You can see we've got a big negative day, and the pullback's right there to 38%. So if I'm watching the Aussie CAD, very simple. We're going to be probably bullish above that level, which is right around 89, 49, somewhere in there. I got very small fonts. I got to fix that. But right above this zone, you're probably going to hold bullish. If, in fact, this 38% goes, then we've got to start looking for secondary entries, which could potentially be bids down there somewhere around 89.25 or maybe even 89 even. Pretty good stuff right there in the Aussie CAD. I'm watching that close. I think that is a darn good, really a darn good place to begin. Okay, we had a question about Bitcoin. Let's go ahead and look at Bitcoin really quick. A daily chart on Bitcoin shows us that we had a massive spike yesterday. Now, that shouldn't surprise really anybody going into something like CPI. It's difficult to always really try to figure out what CPI is going to do to crypto because crypto sort of marches to the beat of its own drummer. But when you do look at what's happening here in the Bitcoin market, huge spike. We went right up. I believed that we were going to go up and test 125, and we just didn't quite get there. Then the big reversal came in. Now we're at 118. Boy, I mean, any chance for me to buy pullbacks here in Bitcoin is not necessarily a bad way to do business. And right there is where I would start my Fibonacci retracements. Why would I do that? Because that's the spike formation. We're beneath the previous candle. We're beneath the subsequent candle. What do you got right here? Nice big rally. And then that spike high above the previous, above the current. You got a pretty good level right there. 38% is a big deal. Don't be surprised if Bitcoin comes off a little bit. Gives us a chance to buy down there at like 116.5. That would be absolutely fantastic. That would be good stuff. Let's see, Jim Kelly, Euro USD. Absolutely. We're going to be looking at the Euro USD here in just a second. We're going to trade that one live. Hey, hello, Shane. Good morning. Good morning to you, too. Ill-minded kids. Yo, green morning. Yeah, we're going to see. We're going to see exactly what happens. Abadega, what prop firm do you suggest? I don't suggest prop firms just yet, but there may be probably in the next few months, potentially one that I'm going to like a whole lot. Steve Francis, good to see you, Steve. Absolutely, Kiram, you're welcome. Jim Kelly, let's see. All right, guys, this is it. US CPI, this is the market mover for this week. Let's get on with it. Here's what we expect to have happen in about 5 minutes. We expect core CPI to tick up month over month. We also expect CPI, sort of our headline CPI right there, to tick down 0.2% from 0.3. And the CPI index really is what I'm going to be watching. We need to see signs that consumer prices are flattening out a bit. We haven't seen that throughout 2025. We previewed this yesterday and really talked a lot about, we were in a much better position last year than we are right now. A lot of folks believe it's tariffs. A lot of folks believe it was the late year rate cuts that we got last year. That's sort of the camp that I'm in, and we still cannot seem to unwind what has been an incredible liquidity bubble that's happened since COVID. So the big headlines that we're looking at today, this is interesting right here. Wall Street is concerned about the reliability of government inflation data ahead of the CPI. That's big. Why is it big? Because as we move forward, since Trump fired the BLS manager, the Bureau of Labor Statistics, and then also, I believe they do this number as well. I don't know. In any case, the statistics folks, as soon as they got fired, everybody wonders about the validity of the data now. That's going to be big. So we're going to see a number drop. We're going to see a number come out. We're not sure what it's going to be. And no matter what it is, I think there's going to be a fight. If it's too high, it's going to be the Trump administration blaming the folks that are counting inflation. If it's too low, it's going to be the financial media blaming Trump for putting too much pressure or firing the statisticians. We are in a mess now. We don't know which way this thing's going to go, but I'm very, very interested. I think we're going to be in for some great trading. Dinesh, good to see you. Dinesh, Eric Cad, good to see you, Eric. All right, guys, let's trade. As far as what we're going to be looking at now, we sort of went through our MT5 platform on Switch. Let's get on over to TradingView. Now, this came out during the U.S., not the overnight, but a few hours ago. This was our Tuesday newsletter. This is the newsletter for the week, and this was one of our picks of the week. If you are a Switch Markets client and you're signed up, you get those delivered directly to your email inbox. But what we're looking at here is the VIX. The volatility index is Wall Street's fear gauge. Now, a lot of folks have been talking a lot about the VIX lately. The VIX is big because it tells us how much angst is in the market. Now, our long-term average is somewhere around 21. That's the rule of thumb I use for the VIX. A key number down to the bottom is 10, and that's a good long-term low. We've got some other things up here that told us, where our average really lies. What I'm looking for right now, we saw a nice rally and a test of this long-term average last week. Now you've got the big sell-off. I'm looking for a downside of 10 if this inflation number comes in better than expected. Why? Because we're going to talk about interest rate cuts, and we're going to be able to potentially bid stocks in a big, big way. All right, let's get on to gold. Gold, here's our 920 EMA crossover strategy. This is one that we're going to be referencing right after the release when we start trading short time frames. You're going to have this gold buy right here. Still very much valid. I mean, we're in the game, but we are off about $40 from that bid. We'll see if that turns around on this CPI report. But really, this trade was looking good to the long side. We had sort of a top side target of about 3,500. Big reversal yesterday. And what we had there was just really a destruction of value in the gold market, off about negative 1.64%. Today we're flat. That shouldn't surprise anybody ahead of CPI. What do we think of gold? Well, we've got some bids. We've got a bid down there at 31.32. I really like that. We just have to sell off just a little bit, a couple $100. That could definitely happen in the next 48 hours after the CPI report. Top side level at 3,500, and that's going to be an interesting zone. Once we break 3,500, then all bets are off. We just don't know exactly how high we're going to go. I would think that we go very, very, very high. Okay, here's a Euro USD. This is one of the strategies that we're going to use when it comes right down to it, trading. We're going to do some scalping with this 9 EMA with RSI confirmation. When RSI gets outside of our pricing envelope, then we're going to look to trade. If it gets below on an oversold territory, we're going to want a bullish close above our 9 EMA. Then we're going to go long. Very simple. If we're above 70, that means we're overbought, and then we're going to go ahead and sell the market and say that, hey, we're going to look to get a little bit of money on the short side of this thing. Okay, so I'm watching for the number 3, 2, 1. Okay, here we go. All right, we got a bullish look right there. The Dolphin 2.8, 2.0. Okay, that's a big time bullish break right there out of the Euro USD. That suggests what? It suggests that maybe that inflation came in hot. That's not necessarily good. It means the it came in a little bit better than expected. Let's see what it is. We've got 2.8. Does anybody have the monthly number? That's what we want to see right here. We want to see the monthly number. I'm watching closely out of my the other side of my eyes here. What do we got? What do we got? They're not reporting it yet. They're still trying to think of a headline. What's the headline? We don't see it yet. It should be out. Why isn't CNBC giving me a headline? They don't want to post it. What is it? Unbelievable. They're not updating their website. You've got to be kidding me. This is one of the biggest. Look at, they won't post anything. Okay, I'm going to have to go to a secondary. I want to see the exact numbers that we're talking about for our inflation report. Absolutely huge wick right there, huge candle. We're going to see if we can get some trading opportunities, but it's going to take us a minute. Right now, we are firmly in overbought territory. No question about it. We are on just a steep breakout on that number. Shouldn't surprise anybody. But right now we're looking to be potentially on the sell side of this market. So don't get too confused yet. Don't get rattled. We're going to give this thing a market. We're going to give it a couple of minutes to settle in. Okay, right here. We're going to go ahead and look at these numbers. Let's see, what do we got? We've got 3.1% in core, 0.3% core. So core came in as expected, still growing. CPI month over month, okay, came in at 0.2% and fell year over year. That's incredibly dovish for the U.S. dollar. And then 323.05, you actually came in less than expected and just came up just a tick. That's incredibly good news for the Trump White House. We're going to see exactly what the financial media reports, but that right there suggests that you're going to get that rate cut in September. Why? Because prices are actually coming down a little bit as expected, and that is modest inflation. So that is big time news. I mean, I'm sure that everybody in Washington, D.C. that's in the government right now is going crazy with that number. And see right here, this right here, guys, just before we get back to the live trading, this blows me away. All right, I've refreshed that for the last 3 minutes, and you're not getting any updates from CNBC. Right now, they're digging into that inflation report, and they're trying to figure, okay, right now, they just posted their headline, less than expected amid tariff worries. They didn't know what to write. They're trying to spin this into a negative. It's incredibly positive for stocks. Right now, we're starting to see a bullish reaction in the U.S. stock market. So let's get out the price, and let's see if we can make a few trades. Okay, I want to stick with this Euro USD here for the relatively short term, because it's going to give us a chance to really execute on this type of strategy. This is our 9 EMA with RSI confirmation 1 minute chart. Now, in order to make this strategy work, you've got to have a market that's moving. We have that, number one. Number two, we've got to have an entry point. Now, the way that we get entries on time frames as short as this is we've got to be in either overbought or oversold territory. Right now, we're in overbought territory. We're going to look to sell this market once we get a bearish close beneath the 9 EMA. So once we get a close beneath there, we're going to look to sell. How am I going to sell? I'm going to have a market order, and we're going to look to sell on that candle close beneath the 9 EMA. So I'm watching the Euro USD closely. I think we're going to have a chance potentially to trade that here in the next few minutes. Let me see market to bullish. Absolutely, Dolphin. Absolutely. Ron Stevenson, 0.2 monthly. It's a huge number. I mean, that's a beat. That's a downside beat that we did not think we were going to get. I expect the media to start squabbling about the pressure being put on the Bureau, on the labor, not the labor statistics, but on the statisticians themselves. That's what the talking point's going to be today. It's going to be, can we believe these numbers? And so that's what the market's going to have to price. Personally, I'm very surprised that inflation is where it's at. I thought that it would be higher, but it's not. So that's a big-time bullish number for U.S. stocks. It's going to be a bearish number for the U.S. dollar. Right now, the DXY sort of coming off just a little bit. So we got a 1 minute chart. I'm going to go ahead and give this the next 48 seconds, and then we're going to open up another market and see if we can't find maybe a long-term level potentially to trade. I think that things are going in. They're interesting. This is going to give us a great opportunity to trade some U.S. equities indices. We're going to pull up some equities futures here in just a minute and see if we can't get something to trade. In any case, what should this mean for the U.S. dollar? Realistically, what should it mean? It should be bearish. It should be bearish. When CPI comes in low, you got to remember what happens to the USD right here. Let's see. Low, bearish for the USD. Expect weakness versus the Forex majors. That's exactly what we're seeing right now. Bullish for the USD right there, low. It came in low. So if, in fact, it comes in low, it's bearish for the USD. What happens to commodity prices? What happens to stock prices? They go up. Okay, right now, we're not going to wait around on that. We're going to see if we can find something else to trade. What's happened to our gold market? Let's go ahead and take a look at spot gold here on this 1 minute chart. Much the same type of formation as the Euro USD. Only one difference. We didn't get into overbought territory, and what you have here is you got basically a no trade on gold, at least on this time frame, on this type of strategy. Let's go to a 5 minute chart. Let's back off and see where we're at with a 5. Okay, the 5, we're in pretty good position. Looks like to the top side here. So if we do get a rally out of gold, maybe over the next several minutes, maybe over the next 25 minutes or so, we'll have the ability to sell this market as we roll into the U.S. Open. I don't particularly hate doing that. It's whatever these technicals tell us. So remember, 9 EMA strategy. Head on over to How to Trade Calm on YouTube. You can get in there and be sure to watch that video. It's a short one. Gets you in and out with this strategy. Shows you exactly how to trade it. We also trade this one on live stream with full webinars, full tutorials. Check out one of our channels, Switch Markets TV, Switch Markets here on YouTube is our newest one. We do a lot of exclusive webinars there. We also do a lot of workshops on how to trade and Forex signals pretty much every day. Okay, so we're watching this closely on the 5 minute. We're not really getting anywhere here. Let's go to the Euro. Let's go back to the Euro USD, and then we're going to look for something else. Okay, this right here, this is our trade. This is what we want. This is our trade. Now, I really like this formation. It's still a bullish formation, don't get me wrong, but I'm not above selling it. And the reason why is I want to attack right down in here. We're looking for a bearish close right beneath our 9 EMA, and then we're going to go ahead and sell the market. Once that occurs, then we're going to go ahead and cover exactly how to set this trade up, profit target, and stop loss. As far as our stop loss goes, in my view, it's the most important part of this strategy. You have to know where to put your stop losses, and you have to be dedicated. You have to be disciplined. You can't just step in and say, okay, I'm going to put my stop loss anywhere I want. It doesn't work like that. You're going to have a good feel of how these markets function and where to put your stop. That right up there, that's going to be your stop loss. That's going to be your stop loss. So what you want to do there is you want to put that down and make sure that you know exactly where to get out. We're not short yet, but we're getting there. I mean, I almost hate these because we waste so much time waiting for them to set up. But guys, this is trading. They don't pay you to trade. They pay you to wait. They're not... Believe me, they don't pay you to trade. They pay you to wait. Let's see. We got gold and Bitcoin. Yeah, I'm going to go ahead and take a look at Bitcoin here in just a second. It's definitely one of the ones that we want to look at. This CPI number is bullish for gold and it's bullish for Bitcoin. No question about it. No question about it. A weaker dollar is going to mean rising prices. Okay, 21 seconds. Can you tell me what is the winning percentage? Ace player, this is one of those where I'm going to have you do your own research. Your winning percentage is going to depend on your risk versus reward. It's also going to depend on your time frame. Now, the lower the time frame, pretty much the less reliable these are, but this is a pretty good time to be doing this. Why? There's a lot of volatility, a lot of participation. Okay, there's our trade. Let's go ahead and sell it. We're going to sell our market. Okay, we sold market right there. That got us short. Why? Because we got that bearish close right beneath the 9 EMA. There it is. Okay, there's your bearish close. Where does our profit target need to be? I'm a one-to-one trader. I love one-to-one trading. It's pretty much my favorite way to trade risk versus reward-wise. So if we're going to get out, let's go up 116.52, somewhere up in there. I want to pad that just a little bit above that swing high. And my entry point is where? My entry point is right around, 116, 116.26. What do we have right there? About 26 pips. So what is that going to set us up for? We need to get at least 26 pips to the downside. I'm looking for a test. I'm looking for a test somewhere right around 116 even. I like this trade. Unfortunately, it did go against the fundamentals today. We're taking a bit of a hit here, but we do have a little bit of room to work. Now, one of the beauties of a strategy like this is if we get stopped out, and right now it's moving against us. It is. I mean, that's the bottom line. But if we do get stopped out, we know exactly where to get out of the market. We know exactly where to get out of the market. And right now, my stop loss is going to be right up there at 116.52. We took a play betting that we were going to get a retracement back down into this initial CPI number. And it looks to me like we're wrong. This is going to rally up against us. Are we out yet? We're not dead yet, but we're getting close. I can tell you that. We're at 116.40, 116.39, and 116.52 is going to be our out. Now, here's the deal with trades. Any kind of trades. This is a great illustration of what it's like to take a losing trade in the market. We're not dead yet, but we're getting there. Every trade, every good trade has three parts, all right? It's got an entry point, it's got a stop loss, and it's got a profit target. This is our trade for right this minute. Does it look good? Doesn't look good. Doesn't look good right now. It went immediately against us. Why? Because there's more buyers than sellers. You say, Shane, why is the market going against us? Because there's more buyers than sellers. The buyers are piling into this market because of that CPI read. They believe that the Euro USD is going much higher. It looks to me like we're in big trouble right now. We need a major reversal to save us. I like our stop out position, though. I can tell you that if we trade above 116.52, we don't want to be around. We don't want to be holding on to these shorts hoping price goes back down in our favor. We think right now that potentially we could be looking at a trend day up for the Euro USD, and that's fine. We're going to exit our trade at our stop loss. Now, the big question is how do you dial your risk in? My rule of thumb is between 1 to 3% of your account balance on a given trade. 1 to 3% on a given trade. Now, I understand that a lot of folks in here, you have small retail accounts. And it's really hard to step up and trade 1% of your account and expect to make any money at all. When you're learning the market, I highly recommend that you do just that. I highly recommend that you trade just 1%. Get used to the moves. Get used to, hey, taking a big draw right here. I mean, we're down. We just put, what do we put on, 100,000? So we're looking at about probably a $200 loss when we get swept out. It's really a manageable loss if, in fact, you have a large enough account. But let's say you have a $500 account and you're looking at taking a $225 loss or something like that, $250 loss. It's too big. And you got to make sure that you actually trade within your means. And right there, we are out. So let's go ahead. Let's buy this thing, and let's go ahead and close the trade out. Let's go ahead and close out. Okay, we got stopped. This trade really didn't go positive for us at all. A little bit there. Price reversed, and now we're sort of moving higher. So what I would say is this is a teachable moment. You got your entry. You got your exit. Was it the exit we were looking for? No. 1 to 3% of your account, you're going to be just fine. You can weather that storm on a 1-minute chart. You're going to take a lot of these trades per day. Now, I will allow you to go to to a 5% trade. If you want to trade 5% of your account, you need to make that money. Go ahead and do it. Go ahead and do it. Just remember that the one thing you can't do when you're trading big size, 5 to 7%, 8%, 9%, is you can't lose a bunch of trades in a row. That's important. So always watch your winning percentage right here. This was a high-risk trade, no doubt about it. I really was looking for a bit of a retracement and fill into this zone right here. We didn't get it. We got knocked out. As far as I'm concerned, I really don't care what happens now. We'll regroup. Maybe we get another trade later. More than likely we will. Okay, you got a buy entry for gold. Let's see. Let's go back to our gold, our 920 EMA. I do want to look at this. Interesting type of a chart. This is a daily chart. Sort of was long from somewhere up there at 33.81. It's a position trade. You could be in this trade for several weeks if it's a swing trade. But right here, you're getting a little bit of bullish compression on the daily. Interesting. We may, in fact, break back above these moving averages by the end of the day. It was very, very dovish for the U.S. dollar. That should send crude oil prices should rally, and also gold prices should rally as well. So let's say we're going to go ahead and trade the gold. I love this buy down here. This is a bullish pennant right here on the monthly. If we wanted to go ahead and get down on our short time frames, let's go ahead and move this over to gold, and let's look at that 1-minute chart. Now, what exactly do we have? We have a different type of a setup. What kept us out of trouble here? Essentially, it's the same thing that just happened to the Euro USD. What happened here, though? We weren't in overbought territory, so we didn't have a reason to sell it. That's interesting. The market's moving higher and higher and higher. Interesting stuff. Let's look at some Fibonacci's on gold, though. Let's go ahead and take this down. Let's take it down to maybe a 4-hour time frame and see what's happening on the 4-hour. Okay. Sort of a tough market conditions right there. You've got a spike high. We went down. We're going sideways here. Do we think we can get a rally out of this market? I believe we can. I think that the long side is probably the right side to be on. So if that was my idea and I wanted to buy this market, how could I do it? Fibonacci's aren't going to help us. The way that I trade really aren't going to help us. You're going to work from this spike high to this spike low. and you're going to be somewhere right in there's going to be top side resistance. So if we were looking to buy right now at 33.52, 33.62 probably would be a legitimate top side target for today. We've also got a 13-period EMA coming down on 33.60-ish. So you're going to want to definitely be careful there and understand that, hey, that's going to be your top side, potentially an intraday top side target here for gold. Now, how could I possibly trade that? How could I get in on it? Well, we could go to our 920 right here. 9 EMA crosses over the 20. It's a buy. We could look at it on a 4-hour chart. We really don't have anything right there. If we wanted to go long, do we have any signals at all here that could get us long? 30-minute chart, I'm starting to like this. I'm starting to like this right here. You potentially get a crossover, the 9 over the 20, and then look to buy this thing. It's not a bad way to do business, but that has to set up first. Let's go down to a 5-minute chart. Okay, there it is. There's your buy signal. Now, the only problem is short time frames. You're inside of your RSI envelope. I would be very careful taking this trade just because the market is sort of flattening out. But if you wanted to take it, there's our gold bar, our coded 920. I mean, you could take the bid right now if you wanted. Let's go ahead and let's go ahead and put it down and see what happens. Let's go ahead with our order. We want to buy market, and that should be right around our entry point. Now, typically, when you enter on a trade like this, you're going to want to go right on that bar close. So right as soon as you get that target, that's the way that you want to go. 5-minute chart, I like this a lot. Where would our stop loss be? Our stop loss is going to have to be beneath that swing low down there. And what does that set us up for? 33.37. We've got a 33.50 buy, something like that. That's about $13. So where exactly could we shoot for if we were looking for maybe a 1-to-1? 63-ish. Right in that zone. Remember, we've got big-time topside resistance at 62. I probably would be looking to take profits somewhere down in here, maybe 61, maybe 60, something like that. That would be the idea, though. So you can see this 5-minute trade's already starting out pretty good. We actually could have waited for a retracement bought from the moving averages or a Fibonacci level. I made a video about that a while back. You check out our How to Trade Calm YouTube channel, Fibonacci's with your crossover strategies and your 9 EMA. This is the 920 EMA crossover. There's our crossover. We've got a beautiful code there. There's our bid. And now you can see we're starting to get a little bit of positive price action. So what happened today? Well, we got into a little bit of choppy action. We did. We're getting choppy right now. I would say that the long side is probably the right side to be in gold. As far as the Euro USD goes, that rally probably is going to continue. And as far as the U.S. equities goes, we probably need to take a look at those two before we get started with the U.S. session, which is in about 45 minutes. So if we were looking at this, let's go ahead and pull up. Let's look at the U.S. 30. This is always a good market to look at just because it gives us a sort of a broad perspective on what traders are thinking about the most popular or the biggest equities index in the world, or at least the most famous, and that's the Dow Jones Industrial. What do we have right here? Well, we've got a 4-hour chart, which really doesn't help me too much on the U.S. 30, but we do have a nice big bullish candle setting up. A lot of that is because of what? It's because of your CPI figure. I think that this is going to be the catalyst for us to drive towards 45,000. There's no question about it. I think that that's going to be your top side target. If you were in fact long from right here, you would have to be looking for a test of 45,000, which is up there in roughly about $750, or excuse me, 750 points from right now. So I'm interested in what can happen here. It looks to me like we're in a position where things changed. Things really just changed. If inflation's in check and the jobs market's coming way down, that means that the bankers are going to want to cut interest rates, and they're going to want to do it in September. That's key. So if we're looking at something like the US 30, and basically the traders right now are saying, okay, I think we're going to get our interest rate cuts now. Now they're trying to figure out the impact of a lot more money in the system. What is that going to do to stocks? It's going to send them up. What's it going to do to Bitcoin? It's going to send them up. We're going to look at Bitcoin here in just a second. But right here, my top side target would be 45,000. You can see the US 30 very bullish. If you wanted to use Fibonacci's to trade this one, you certainly could. I like the Fibonacci retracement sequence on these short time frames after you get into when you get into a situation like this, where you're going to see risk assets and commodities probably grind higher throughout the day. Something like this, 44,162, that could be a pretty good pullback for right this minute. I just don't know that this top holds. It looks to me like the US 30 is going to blow high. All right, let's go ahead and take a look at that. Crypto, we had a lot of people asking for crypto. It's a bullish market driver, no question about it. Right there's your CPI candle, bang, that's a big one. And now you've got a nice big rally where right up to around 119. Boy, I would be looking for 120 to the top side unless we see some bad news later today. But I'm not sure that much is going to derail this type of this type of market environment. I think that what you're seeing now could be the beginning of the Trump rally too, where you see a period of I won't say loose interest rates, but I would say a period of lower interest rates is going to lead towards a weaker dollar. There's no question. And then you're going to have a situation where these commodities, these risk assets, and also crypto are in a position to rise. So if I'm looking at Bitcoin right now, let's take a look at a 4-hour chart on Bitcoin. Sort of the same thing that we just looked at for our gold. Take a look at this. Bitcoin right there, sort of flatlining after a big sell-off. What should we be looking at, though? I mean, what would be the way that we want to play Bitcoin right now? I would say to the long is going to be the way that you want to be. I don't know that I would be taking shorts on risk assets right now, especially crypto. And you can see your key level right there is 118,650. That's absolutely huge. Be watching that to the top side. You're pretty much bullish above that zone and you're bearish beneath it. I would love a deeper pullback, something down to 116,365, 116.5, back end of our daily golden zone. I would love that. I would love to target this order block down here potentially. I would love that. That would be my optimal long, my ideal long. But right here, we have to respect 118.5-ish. Absolutely. Let me see. I bought and I made 100. Somebody help me make 10,000. Good point, Andrew. I mean, who wants to make $100, right? Yeah. Let's see. Hi, Diopita. Is it bullish for crypto? Yes, it is. Yes, it is. No question about it. Let's go ahead. Let's go back to our 920, see how that's doing. Oh, interesting. So we had a nice big rally right there, almost up to our target. So our high was 58. Now we're sort of coming back down. Really an interesting type of a move. You're up 650. Psychology. This is what some of you folks were talking about a little bit earlier today. In the live chat here. In our YouTube live chat, let's see, Jacob and Kuram, we're talking about what's the, use your brain, try to get profitable, I need to make money. But then the answer was the emotions. The emotions were holding the trader back. And we talk about emotions and trade management every single day. What do you do now? What do you do now? Okay, we made the gold trade. It's up, $700. We're working towards our target. Do we hold for our target or do we pull it? It's really hard. This is a really hard type of a deal. There's a couple of things you can do. You can move your profit target to break even, your stop loss to break even. You could adjust your stop loss right here and play a little tighter, or you can leave the trade as is. It's really hard to do because why? Because there's money at stake. Now, right now, we just went with the leverage I'm using, and these are demo dollars, but we went from about plus 700 to about plus 350, 360. What do we do now? Now, a lot of traders are going to see that pullback and they're going to say, I got to get out. I got to take the money and run, especially after that Euro USD trade didn't work out so well for us. So you've got to figure out in your own mind how you want to trade these things. Now, if I'm trading a 5-minute chart on a 920 EMA crossover and I'm going to say, all right, how many trades am I going to get today? You could get a lot of trades today. You could get 5 trades. You could get 10 trades just in one market. So you've got to sort of weigh okay, what do I want to do? Do I want to play these tight? Do I want to make sure I don't lose, or do I want to put myself in a position to win? How long do I want to hold these trades? Right here, this would be really challenging. If you moved your stop loss to break even, you're probably going to get stopped out. But is a break even trade better than watching this thing reverse and go down and take out our stop loss? And the answer is yes. For me, if you're going to trade this as a system or anything like it as a system, you've got to be aware of what's happening, and you've got to understand that within the framework of the system, you probably have to let these things play out. Now, for me, I've never been that kind of trader. It's not my personality. I have to get in and get out. Like right here, I would have been long gone. No question about it. Well, it didn't hit your target, Shane. I said, I don't care. That thing went right in my favor right away. I'm walking away with my 700 because right now you're in a dogfight. This market can go either way. We could get knocked out and stopped out, or this thing could run up and hit our profit target and put us in a position to be profitable for the early session. That's up to you. That stuff's up to you. You've got to think about that for yourself, though, and you've got to understand not only is it important that you trade within your means risk-wise, but you also trade within your emotional capital. You've got to be able to manage your emotions. Right now, I know me. This would be killing me. This would absolutely be killing me. Now I'm down 230. I'm basically back to square one. I gave back all of my gains, and now I'm down. I don't feel very good at all about this trade. Not now. Is there any reason really to bail out? Not yet. You can see we're still above the moving averages. We're still a little bit bullish on the day here for gold, but we are in rotation. We're only up 0.25% on the day. Are we going to have a chance to hit our profit target? Yeah, I think so. But it could be a long road, and you have to decide. Each one of you has to decide, am I prepared to be in these trades and go with the ebbs and flows and take the emotional punishment of staying in them? Now, a lot of traders, the way that they do this is they have their system, they plug in an EA, and they just let it play out. They don't even watch the trades. I think that's a great way to do business. I've done that with swing trades. I just put them down and forget it. I come back when they're decided. There's nothing wrong with that. Figure out what works for you. Let me see. We got a great comment right here in the How to Trade trading room. Steve Francis, gold futures hit 35 this week. Does that mean spot gold will follow? More than likely, yes. Gold futures, if you want to pull up gold futures, we're printing 3,400. Let's go ahead and pull those up. This would be December gold futures. Remember, that's where the action is. All right, that's right now. That's where the volume is. This is what we're trading the front month. The December gold futures contract is probably the most heavily traded of the year because we're beginning in August. We're going to trade it all the way through December. Institutions love that December contract because they can help them hedge risk. They can take longer-term plays, and it also represents end-of-the-year trading, which is huge for institutions because they're balancing their books going into 2026. Believe it or not, as we roll in deeper into Q3, midway to Q3 and early Q4, that's exactly what they're going to be doing. So when we trade the December contract, it's business. There's a lot of action in there. So this right here is what you're talking about, Steve. The rally right up there to 35, 34, and then you got the big sell-off. That should be a big red flag for a lot of us. We believe that, yeah, price is going to 3,500 eventually, but the real issue is when do we get there and how do we get there? For me, I look at something like this and say, yeah, there's still sellers at 35, guys. There's still sellers at 35. No question about it. All right, let's go ahead and take a look at Bitcoin here real quick. What I want to do, though, is I want to take a look at Bitcoin on our 920. So let's go ahead and do this. This trade right here has turned around on us. Welcome to scalping. Welcome to intraday trading. Okay, right here is a good look at our Bitcoin on a 5-minute chart. You can see Bitcoin is rallying. No question about it. That would have been our buy signal, our coded buy, which is right there, right around 118.9. So you're up about $300 so far. Pretty darn good trade, I think. I think that's probably the way to do it. Let's go down to a 30-minute chart and see exactly what we have building here on the 30. It looks to me like we could potentially get another 30-minute crossover later today. I would love that. I think that you want to be long crypto and commodities right now. I don't know that I would be short. I think that's very, very risky. I think it's very, very, very risky. No question about it. So let's see our gold's stagnating right around. Let's see, we lost the handle at 33.50. That's going to be a tough trade. We're going to be in that one a while. I'll watch it as the day progresses. Maybe post an update a little bit later. Let's see, AS, has the CPI report been submitted? Yeah, it has been. It came in better than expected. Just go back and watch the beginning of the live stream, and you'll have an opportunity to sort of see the live analysis. What did it mean? It came in better than expected, so it meant what? It was low. The CPI number was low. That's going to be bearish for the USD. It means it's going to be bullish for stocks, bullish for commodities, more than likely bullish for crypto. Big time report, guys. A lot of people are going to be talking a lot about this report for a long time. I think that there's going to be an opportunity here for us to trade the U.S. Open. As far as stocks go, they're up modestly. If you made a bunch of money, be careful. Don't get chopped up with stocks on that U.S. Open. We could definitely see a big pullback like we're seeing a little bit in gold right now. We are definitely seeing it. I mean, that's the way the markets move. We don't move in straight lines, neither do the markets. So that's exactly what happened, AS. Let's see, Tina Xing, yeah, I would sprint. Yeah, I would have taken the money, no question about it. What did CPI come in? LC Looper came in at 0.2. Headline CPI came in at 0.2 month over month, which is a big beat. We were looking for 0.3, and to see that number fall, that was huge. All right, everybody, I'm going to go ahead and sign off here for a while. We're going to have a trade idea out in the How to Trade trading room. We're going to be looking at a situation where we're going to see exactly what to trade. I'm not sure yet. I want to see this settle down a little bit. We'll recap the CPI number, what it means, and they'll put out the full CPI report here probably in a few. Well, it's already out, but we'll see some reporting, some media headlines on what prices rose the most. I'll put that in that update as well. And then right now, let's see gold. Yeah, gold's fallen to about 33.48. Doesn't look good for that short-term trade. Choppy, absolute choppy trade today. I'm still bullish, though. I'm bullish commodities, I'm bullish crypto, and I'm bullish stocks. I think you're going to get a pretty good rally out of that. I don't think anybody saw this number coming today. So it's just a question of if we can stay in some of those trades long enough to get paid. Remember, risk management's everything, especially on a day like today. Very, very difficult to trade these high-impact news events, but it can be done. You just have to make sure you manage your risk, keep your head on straight, and sort of deal with price as it comes your way. Today's going to be a great trading day. Tomorrow's going to be better, and Thursday is going to be better. All right, everybody. I want you to have a fantastic trading session. If you have any questions at all, be sure to head on over to the How to Trade trading room. Send me a PM. I'll get back to you personally. If you have any comments for this live stream, be sure to leave them below, and I will address them, or any questions or comments I usually reply to in relatively short order. All right, everybody, that's a wrap for now. You have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.